I mean, the numbers from Redfin, they're big. Maybe your numbers might be slightly different, but those are unbelievable. What's your take?
Certainly rates are up, and that's a lot of what everyone's reacting to. And rates are up on purpose, right? The Fed is actually trying to cool down inflation across the economy. As you just mentioned, housing is an enormous part of the economy, and pushing those rates up can certainly have a negative impact. I've got to tell you, though, what we've seen, because there's such a supply and demand imbalance here, we just have not constructed enough homes since the Great Recession to meet the demand out there. We've seen buyers reacting and absorbing as quickly as rates have increased, right? So buyers are adjusting their expectations a bit, perhaps downsizing, maybe moving a little bit farther out, changing their shopping patterns a bit, but we're still seeing the velocity of homes extremely rapid. So approximately 17 days on average, homes are staying on the market, which is a pretty good indicator that buyer demand remains very strong.
What's normal? 17 sounds quick, Ryan, but I don't know what the benchmark for that might have been, a couple years ago.
17 is quick. So to put that into some context for you, 17 days on market makes it feel to most buyers like they have to move immediately as soon as a listing comes on. More normalized would be, call it somewhere between 35 and 45 days on market, where it feels like you still need to move quickly, but you probably have more than one weekend to see a property before you need to make a decision. Today, that's not the case in most markets. Buyers need to be qualified, feel very confident in shopping, and be able to move very quickly when a home comes on the market, and they're feeling it.
Yeah, I mean, listen, there's two ways to look at rates. Rates are well up from where they were, but they were on almost impossible and I'll dare say artificial lows, Ryan. I mean, I think you would agree with that. Given the pandemic, interest rates going to like 0.5%, the Fed at zero, throwing money from the sky. Rates are up, but I remember when 5% was a good number on mortgages.
Absolutely.
I mean, that wasn't that long ago.
Absolutely. You're putting it in historical context, which is terrific. I appreciate that. If you look at the longer arc of history, even the past 10, 15, 20 years for most of us in the most recent time that we purchased, 5-6% feels like a relatively normalized rate to be able to be paying for a 30-year fixed rate mortgage. And of course, there are some alternative products. You're at 4.5 right now for maybe a 15-year. You've got some interest-only products coming back into vogue, but it feels like a roughly similar rate to what people have gotten used to. And I do think, while it is shocking how quickly it has increased, buyers have readjusted to that, and folks like yourself are reminding people this is actually historically a reasonably decent rate to be able to borrow long-term money for an appreciating asset.
Yeah, I mean, also, this is unbelievable. A local friend who's a realtor in my area said that about 1/3 to 1/2 of all the transaction he's seeing are cash. I mean, there's no cheap homes in the state of New Jersey, right? Are you still seeing these huge cash buyers come in? Because guess what? Mortgage rates go up, they're the honey badger. They don't care.
Yeah, absolutely. So cash buyers are still a very significant part of the overall picture. So when we're seeing homes stay on the market on an average, like we talked about, 17 days, and we're seeing an extremely competitive market out there, how some buyers are differentiating themselves is putting a higher percentage of cash down or becoming an all-cash buyer and perhaps financing it after the close, or at least not making it a financing contingency to make themselves as competitive as possible. For instance, we even have a product through our RealSure partnership that can make you look like a cash buyer in the markets where it operates today by essentially backstopping it and allowing you to not have a financing contingency. Again, to make buyers as competitive as possible. As rates tick up,
Ryan, quickly, how do you look? I'd like to look like a cash buyer. What are you borrowing against your other assets like stocks? So you're not putting a lien on the home. You're borrowing against other assets that you have to get a cheaper rate. No.
So with the RealSure product, for instance, when we're backing a cash buyer, we essentially underwrite the buyer as well as underwrite the property, and we take the risk of something coming up, for instance, in the appraisal, and we just absorb that risk so the buyer doesn't have to. We're pretty confident in our ability to underwrite the properties as well as the buyers, so we don't think it's a whole lot of risk to take, and it allows buyers to look much stronger out there in the marketplace, eliminating the appraisal and financing contingencies so they can hopefully win in a competitive environment.